What's up, everybody? I wanted to do a little impromptu trade recap. I know I was very active in intraday commentary today, and I want to basically go over what I was saying and why I was saying it with the trade that I took, why I took it. And honestly, looking back, it really wasn't a high quality setup. Yeah, it worked out, and we got a crazy sell off today. And as I'm recording this, there's absolutely no bids in the market, so no reason to really play long. It's very low quality. But reviewing this trade, I'm just going to use it basically as my own personal little review or journal, and what you guys take out of it is what's going to matter. But first, I want to get into the pre-market plan. Again, this video is impromptu. I'm just going to talk on how I took this trade. So from the pre-market plan, I said, in my opinion, we're setting up for a bigger move up or down. Play levels and have no bias. It's very key. A lot of people have a bias. They see the market was, very strong in the past few days, and they automatically think we're going to break out swinging calls or just, buying calls at the open, speculating that it was going to move up. Play levels and have no bias. So there's a few scenarios I'm watching. This chart does not look like it's a strong move up. And then I also had a couple zones which I labeled key. Now, why they were key was because they were either at a area that they worked before, or they were at a high or a low on the chart. So scenario number one was, I'm going to pull up the chart so we could look at the chart like it was in the pre-market. So this is what I had pre-market. As I posted this plan, the market looked like this. Scenario number one was we had demand at 40, 46 to 30. And I do want this to hold if tested. If we could remain above, I was watching a bounce out of this level to go test the supply that we actually rejected overnight. So that was scenario number one. Again, nobody can predict what's going to happen in the market. I don't wake up and say, okay, we got this 4046 demand. Yeah, we're going to bounce out of this. And yeah, I'm going to play long here. No. The right mindset and how to trade these levels, I don't care if you use supply demand. I don't care if you use key levels. Come up with your levels of interest and then react and gauge what price does at those levels of interest. Could we have very well bounced off of this demand zone? Absolutely. But we did not, and we reacted to what price did. And before the market even opened up, in intraday commentary, I said I'm not interested in taking long at this 4046 demand zone because we moved far into the zone without showing signs of bouncing. So a good tip is if we move far into a level and we don't show signs of bouncing just like this before the market even opened up, I'm less likely to take it long. Usually the best zones bounce right away. Look at this 30-minute demand zone. This is where I got that 4046 level. We came into it, had some lower wicks, didn't spend much time inside of it, didn't really move far into the zone with just hanging out inside, and we bounced. Look at NASDAQ from yesterday. Let me pull this up here. NASDAQ from yesterday bounced off a demand zone to the penny. We hit the zone, we didn't move far into it, and we rallied off of it. So usually the best zones, it's not always the case. It's not like 100% of the time, just like with nothing in the market is 100% of the time. The best zones that provide the best reactions are ones that we don't hang out for long at it, and we don't move far into the zone. Another good example, look at the supply zone from yesterday. We hit it and immediately sold off from supply into demand, and we rallied. Now, this was a key zone, just like that 30-minute on ES, because we bounced off of it yesterday. And you might always hear me say this expression in the Discord. If we get a same reaction, we're going to get the same result. However, if we get a different reaction, we're going to get a different result. What I mean by this and why this was key was, number one, it bounced yesterday. And number two, today, if we were going and testing it, I would want to see us bounce off the zone and rally just like we did yesterday to indicate strength. However, we came into the zone, had a different reaction. We're consolidating inside of it. We're moving sideways. We're moving far into the zone. So a different reaction brings a different result. In the first 2 minutes of the market open, I removed this zone and I even said that I was not interested. Okay. So I kind of want to walk through this maybe in like 5 or 10 minute increments of what I was looking at as the market was open. So here we have the S&P, really not much to note. We had the demand zone lower. And going into scenario number two for the pre-market plan, I said if we fail to hold this 4046, the 3-0 demand, we do have demand at 4023, but it's not a key zone. And if selling pressure is heavy with equities, I would be open to playing puts in this range as there is not much support until 4,000 whole number and then the key 3981 demand zone. So that was scenario number 2. You can go back and look at it as I'm going through this video. So in the first 10 minutes, this is what the S&P looked like, and this is what NASDAQ looked like. It really didn't have any direction. It wasn't super clear yet. It was consolidating, and you got to remain patient, especially in the first couple minutes of the market open. Now, pull up equities here. Pull up my other screen. We had equities. This is why it's very important to have a understanding of context with equities. Other names in the first couple minutes were extremely weak. They were downtrending. Facebook, Apple, Tesla was relatively stronger. Microsoft, Google, everything was extremely weak in the first 15 or so minutes. Yet ES was still above this 4023 demand zone. And NASDAQ did not break below this key zone that we bounced at yesterday. So now looking back, and why I said this was not a high quality setup was I took ES short before NASDAQ broke below, or at least tested weakness to the downside of this key demand zone. So we could have very well, and I was watching this very cautiously, we could have very well bounced off this demand zone on NQ, and it could have supported ES to rally out of this demand zone. However, I kind of had good confidence because of how weak the market leading equities were. However, reviewing this trade, in hindsight, it worked, but I think it was a little bit of a lower quality one because of the NASDAQ didn't break below that demand zone. So what I saw here, I'm going to go to a 1 minute. I was watching the 1 minute today. Now I know after I post this, I'm going to get a bunch of DMs saying, oh, do you always watch the 1 minute? And no, I usually always have a 5 minute up. And Bookmap is basically my 1 minute, or I don't use any time intervals on Bookmap. My time slices are set to none. But I could see what a 1 minute chart is, what it looks like, based off a 5 minute chart, if that makes sense. Okay, so what I liked here was we broke below that 4030 level, which was the bottom of that key demand zone, and we came into this 3 hour. I forgot to mention that this 3 hour was not very key for me. It was in the middle of a range. It was not very important. And it was a small zone. And it was kind of given that it was very easy to break if the selling pressure was heavy. What gave me confirmation to enter this trade was this right here. So I saw the market sell off. And we had 4030 that as we came up, we failed to hold above 4030 and reclaim above it. Now on Bookmap, again, every time I post Bookmap, I get tons of questions on this. In the Discord, there is a Bookmap resources tab. And towards the top, there's a couple videos on here. I do plan on adding more videos specific to Bookmap. However, the tape reading videos in the course explain exactly what I look for on the tape, and we just visually translate that to Bookmap. So check out the Bookmap resources tab. And in the intraday commentary tab, a few minutes before I entered this short position, I was saying exactly what I just mentioned. If the NQ could break this demand, I'll expect more selling into the lows. This could help support an ES break, first targeting 4,000 and then 3981. They're both trying to bounce out of these demand zones yet. Do they bounce or do they fail? We'll know shortly, and this will give us key information. This was when equities were very weak. And then at 9:49, the minute I entered, I said as long as we could remain below 4030 in the next 10 minutes, I do think lower prices will be visited. Now again, I don't rate this a very high trade, although I made on my last fill about 150% return on this trade. It worked perfectly, hit my target perfectly, entry was perfect, but I don't rate it a high trade, even though it did work out. I think I entered a little prematurely. So what I liked here was at 9:40, we had a break below 4030, and then we saw some bids step in at 4025 with some very heavy aggressive selling pressure. And I actually have a live video recording of this. So watch what happens here when we break below 4025. Watch this. You're going to start to see very heavy aggressive selling. And I don't want to get this video all over the place, but the key points I want to make here was I took the market short when we broke below 4030. It acted as resistance. And looking back at this trade, NASDAQ never broke below that demand zone. So hindsight, this was not a very good setup in my opinion, although it worked. But I had the market leading equities that were extremely weak to give me more conviction. So that's where we're at right now to sum that up. And watch what happens here. We have a bid for 950 lots at 4025. Watch what happens when we test them. Very aggressive selling wipes them out. Look how the bid's getting smaller, right? Remember how I just said it was 900? Well, I got a volume profile up right here, and 5,000 lots just hit the bid. And that bid went down by 500 lots. There's not a buyer basically reloading and acting like a big support level. So this is a level easily broke. 900 lots just hit the bid. None hit the offer. And now we're slowly starting to move down. If you took it short on the 4030 break, not bad, but we did have demand here. What I liked here was we saw very heavy aggressive selling pressure, and then the market basically moved up and found resistance right below that 4030 level. We saw some offers step in, and basically where I got 4030 from, 4029 from, how I gauge some of my levels is this. So 4 points below a level basically means we're testing that level. So we had that important level of interest at 4025 with a heavy aggressive seller. If we came up and broke him by about 4 or 5 points, then we tested him by 4 or 5 points, then that means this seller is just getting tested. 6 to 8 points above that level of interest, or below it in this case, indicates acceptance for that level. And everything above 8 points basically means there's a high chance of continuation above that. So where I got my 4030 was, not only was it the bottom of that demand zone earlier, it was about 4 or 5 points from where we saw this a heavy aggressive seller. And that's why in the Discord, I put here, as long as we can remain below 4030 in the next 10 minutes, I do think lower prices are going to be revisited. We're trying to bounce out of this demand zone, but there's no buyers to be found yet. If we reclaim it, it'll put pressure on the bulls, and then we could target 4,000 to the downside. I would like 4030 to close below by 10 a.m. Eastern. We must fail at these demand zones for it to remain. Again, okay, and this is the next important piece of information here. I don't want to get all over the place with this video, but 4029 acted as resistance. We started moving lower, and at 949 I played SPY puts, anticipating that we were going to get more selling pressure to the downside. And what this looked like on the chart was this right here. A move out of demand failed. Again, rallies have been failing. We're below 4030, and on this candle right here, I took the market short. Very, very, very tight risk. I'm short at 4025, right? My stop is above 4030. I'm risking about 5 points to make 25 points to the downside at 4,000, because this was the first target from the pre-market plan. So now I'm in short. Put up target here. Then the market starts consolidating. We break the low. Now at this point, around 10 o'clock, I said there's some heavy volume here at the lows. It usually means more selling. Now this is a very important piece of information here. So what the market looked like, we broke the low over here, right? And then we consolidated. So now we're below 4030. We're below that seller. We're now below this demand zone as well. What I saw here, now I have a chart volume profile on here. So everything that you see on my screen is basically the volume profile for what's aggregated on the data right here. So usually from a profile perspective, When we see high volume, why is my session volume profile not loading? When we see high volume at the low, like this, and there's a volume buildup at the lows, it usually means that lower prices are going to get tested. So you see this right here. These are completed transactions. What this is telling me is as the market came down around 10 o'clock and hit the low a day, and we stayed below the low, we built volume down here. Usually lows get made, if you look at any recent activity, lows get made when there's a very large last seller selling at the lows because he's trapped and then the market puts pressure on him to the upside. Or there's a very long tail on the volume profile indicating illiquidity at the lows. However, since we have a big block of volume at the lows here, I put in the commentary tab why I put this was because it usually means more selling. There isn't illiquidity here. The market moves from areas of illiquidity. This is showing me that the market is extremely liquid here. Now, I'm not going to lie. The market did bounce from that area, and I wasn't nervous because I had a plan in play. Let's see if I could get what it looked like here. So here's that area of volume. You can see the large volume block, and then we bounced. And I'm not going to lie. I was not feeling very confident with this position. However, I had to follow my plan because as we broke the low right here, where is it right here? As we broke the low, this is the consolidation period on Bookmap right here. This is when we built a bunch of volume. We keep breaking the low, keep breaking it, but we're not having so much follow through. So 4020 or 4012 is an important area. That's where that volume built up. And then we got a quick rally. Again, I was about 5 points away from my stop, but we never hit it. So I had no reason to panic. The market's still making lower lows and we're still putting lower highs in. But like I said, I followed my plan, and if I was not an experienced trader, I probably would have stopped out here. But I had absolutely no reason to because my exit plan and my stop loss never triggered. Then we moved back down, and this is around 10:13 Eastern. Around 10:13 Eastern, there's a big battle at 4012. There's very heavy volume at the low. Usually when the lows form, it's a result of a large trapped seller or low volume at that price. We don't have either of that right now, which makes me think the low will break and be tested. However, we are trying to bounce off of it, which is giving the bulls a little bit of a hope. When I sent that update, the market looked like this. And what it looked like on Bookmap was this. Now we're coming back down to the lows, and look at this. We're building even more volume here at 4012 and 4015. So now we got huge volume. This is not a telltale sign of a possible reversal or a possible bottom or low a day. This is a telltale sign that lower prices are going to be tested, and what we do below 4012 is going to dictate where we move next. If we get below 4008, which is that 4-point buffer, and we stay below 4008, then yes, we're going to have increasing downside pressure. However, if we break below 4012 and fail to get below 4008, 4006, then it's going to be a red flag and the market could bounce. That's why I always give it about a 4-point buffer to the downside or even to the upside. 4 to 8 points. So let's look at this. Again, I don't want to bore you guys. I know this video is getting long, but I want to just walk through what I was watching. So that's that. Market's driving me crazy. It's going sideways. There's no real edge in trading this. I would be careful opening up a new position. 412 is being defended. There's just so much volume and tons of liquidity. You'd want 412 to break, attracting more sellers below 408. If we break immediately and reclaim, it's a sign of a reversal to the upside and a red flag for bears. Despite all the other noise, I do expect 4012 to be broken at some point today, whether it be sooner or later. Despite this weakness, if anybody is in short, I would protect your position at 4,000. Okay, so this is where I scaled 75% of my position. So here we have the consolidation, and then eventually we broke with heavy aggressive buying or selling pressure. 750 lots at 4012. And then we got below 4006. Then we had some solid continuation to the downside. And at 4003, I got out 75% of my position. When the market looked like this, we broke 4012. Then we consolidated. We had not a lot of follow through. So these moves to the downside did not last very long. Every time we broke the low, we just kind of consolidated and moved sideways. You don't want to see that for continuation. Look at it when we had the continuation later in the afternoon. That was straight follow through to the downside. It wasn't just break the low and consolidate. This was break the low and continuation. So as we break the lows, you want to see more volume because more volume will bring follow through. And then we hit the target of 4,000. I had some contracts remaining and then got out the rest at this 3981 demand zone. I followed my plan. Yes, I could have capitalized on another 60-point sell-off, but I followed my plan. I entered when I should have, and I exited according to my plan, and that is the only thing I could do as a trader. I also forgot to mention earlier that when we did break that 4,000 mark, you could see we had a very large passive buyer here. And as we did break it, that is the follow through you want to see. We broke past it, aggressive prints came through, then we came back up, sold back off with more aggressive prints, and then there was some solid follow through from that. If we are in short, we have absolutely no reason to panic. Every single dip keeps dipping, and every single move up fails. That's where context is so important. And I think today was a very good lesson because now I'm recording this when the market is closed. And a lot of people are messaging me saying, how do you cope with seeing your contracts go up 5 times where you bought it at? Or how do you cope with not selling at the lowest point today? Again, the biggest thing for me is if I followed my plan, that is the only thing I could do. For example, I got in at $1, and I think by end of the day, the contracts went to like $10 or something like that. And a lot of people see that and they think they have to capitalize on this all-day sell-off. Yes, you can, but if you followed your plan and you sold at your target, maybe look at areas to re-enter instead of trying to capitalize and squeezing every little penny out of the market. Because how many times a month do we get days like this? It is not very often. It's not frequent at all, either to the up or downside. So what's stopping you? Let's just say your target was, let's put yourself in the perspective of me. And let's just say our target was this 3981 demand zone, right? We got in at $1.40 or whatever, $1.30, and we sell it at $4 at this demand zone, right? But instead of selling because we want to capitalize on a big move, what if this thing hits this demand zone and rips and makes a brand new high, breaks pre-market high, and our contracts now are red because we wanted to get a couple more points out of the move? If you sell at your target and you follow your plan, you should not be complaining about trying to make more money even though the market kept selling off. Think of it on the flip side. The market could have went against you and you would not be saying that. But reviewing your charts after the fact, you try to figure out, okay, how could I capitalize on this move? After you sell at your target, find ways to re-enter to possibly play to the downside. Now, when we are selling off days like this, there's a video actually in the video recaps tab. Let me see. On April 21st, about no bids in the market, strong and heavy selling, all day sell off, stop trying to catch a falling knife. Go watch this video again on April 21st. Go watch that video. There's no reason to take the market long. Yeah, we have a green box here, but the market all day has not proved any signs of buying. So when you recognize that, maybe short the rallies instead of longing the moves up. Or maybe short the breaks below the low if volume starts increasing when we break the low. But this was an all-day sell-off. Absolutely destroyed tons of demand zones from earlier in the week. Going to a 5-minute chart now. Tons of demand zones were destroyed on this move down. And that's fine. It was an all-day sell-off. And I'm not the one that always says, okay, I'm right, my analysis is always correct, because I'm definitely wrong a bunch of times. However, earlier in the day, we were saying a big move is coming, and it had signs of an all-day sell-off. Earlier in the day, I was saying this. So recognize the context. Equities were weak. Market was making lower lows, making lower highs. Selling pressure was aggressive. It was heavy. And demand zones were not being met with buying. Those are the signs that I'd use to recognize, all day sell-offs and when I should be short biased, even though there is demand zone, and especially when key zones are not providing bounces to the upside. So I think that is it. Don't complain about a loss if you followed your plan. Now, if you sold prematurely and you did not sell when your target hit, then yes, you got a lot of work to do and you got a lot of fixing up because you either sell when your stop loss triggers or when your target hits. Those are the only two ways I sell. So I think that is pretty much it. I added a little more to this video. The 4,000 break, aggressive selling. Yeah, I'd appreciate any feedback. Let me know in the comments. Definitely a longer video than anticipated, but I hope this provides some value to your trading. It was a very good day for me. This is something that gets developed over screen time and experience. If you've never experienced a day like today, then you're not going to know how to trade it. You're really not. Now that we've went through a day like this, now you have it subconsciously in your head that if you recognize similarities at some point in the future, hey, this could be similar to this day. That's what I did with that recap back in April. Very, very similar characteristics to I think April 21st and even the 22nd when we sold off aggressively all day. But yeah, let me know. See you all tomorrow. Peace out.